I guess our role as a regulator is to enable an environment where we give some space to at least new players such as our digital banks, because these are directly under our purview, regulatory purview, for you to explore and grow. Moving forward, I think how we see is that there will be increasing use of perhaps an open data ecosystem, especially with open finance, open banking, etc., and so on, where there will be some blurring of lines, I'm sure, in terms of how data is being used. So under the financial sector blueprint, we are, one of our focus is really to strengthen the building blocks of how to enable such an open data ecosystem, which ultimately could be beneficial, not just for digital banks, but also for other players or fintech players such as.
I think how each player goes out to market, the products, the propositions, how they embed themselves, how they develop a value proposition will be slightly unique. I think if you take the digital bank license awardees, and if you take some of the fintechs that have gained scale in Malaysia, a lot of them have their own captive ecosystems, right? So they've started, including us, started with an approach that is closer to home. That always helps. Competing on rate or price in any business, you do that only when you run out of good ideas, and that's probably your last resort.
In this business, giving money is easy, but recovering back is very tough, right? So by how using advanced analytics, alternate data, digital banks and also the banks already have creditworthiness check, right? But there's also things that, the willingness for customer to pay. You can assess this today based on a lot of behavior. And I think these are some of the areas that the industry will adopt. Everyone has their own ecosystem. So just after the foundational, getting out the operationalization phase, everyone is going to concentrate to convert their existing ecosystem. And then only you go out to the market once you've done your foundational phase. Otherwise, you're just going to spend a lot of marketing money. So competition is not on our radar.
I think one of the issues that in terms of the deposit side, or so-called the investment side, one of the things that I find that still, you look at a lot of forums and digital forums and all that, you find that there's still a lot of people putting money in investment schemes that are not approved by SC or any authorities, and a lot of them are just purely governed by SSM. And people are all trying to reach for higher yields, up to 10%, 15% or whatever. But at the end of the day, it's just not sustainable in some of this model. So I was talking to some of the people who are working in terms of coming up with this so-called act to govern consumer lending. But the other areas that need to really look at is not just the deposit alone, because it's a fine line we're calling deposit and investments. But that area of investments perhaps maybe need to be tackled a little bit tighter, which will help the digital bank in terms of able to get those investment back to the digital bank, as well as also fintech players who are also governed by either Bank Negara or SC. But I wouldn't discount the incumbent banks, which are digitizing their business as we speak, and most of them didn't apply for the license. They might actually be a little bit more aggressive to make sure that they protect their turf. So in a way, they might actually collaborate with the fintech players, because some of their systems might be a little bit more legacy system that hard to really operate in that environment of the digital type of expectation from the customers, but to really tie up with the open API that they are all adapting their systems to. That may be one area where they can go very aggressive to really compete with the digital bank.